that, I mean, now in the year 2023, our GLS, in terms of launch pricing for OCR is already $2,000 upwards, all the way to 2003, 2004, and then RCR is at $2,400 upwards as well, and then of course CCR will be $3,000 onwards. So where do you think this will lead us to in the next 5 years? Like how are pricing going to look like? Maybe by 2028, what is your own opinion on the GLS pricing?
Okay, so that's an entirely different subject altogether. So if the question is more around general movement of our homes here in Singapore, then I think you need to take a step back as to why are they still so resilient, so buoyant, despite the fact that we went through a major economic crisis driven by COVID that brought many markets down, and also the new headwinds, which is high interest rates. Despite of these two factors, our home prices have remained resilient, buoyant. Not only that, rentals also have gone up. The reasons for that, multiple. Singapore's real estate size is limited, and that's very profound. That's fundamental. Many cities can grow and grow and grow sideways. We can't. We can only grow upwards. And we do need to grow because we are supporting a larger and larger population base, naturalized Singaporeans, as well as through immigration. So that's the direction that we are heading towards too. GLS does form the bulk of the supply, but en blocs also help fill in the gaps where needed. So on one hand, we've got these factors. On the other hand, you've got unique factors such as high savings amongst our households here. And it's a huge phenomena. The household net worth, which comprises value of assets, savings, CPF, has been on the rise consistently for years now. And that in itself has doubled in the last 10, 11 years. So if you were to chart it, it would just be a consistent rise and rise. And it's just a reflection of how much accumulated wealth there is in Singapore. So that's another unique phenomenon. Then you've got the CPF design. It's for savings. And when you have for savings that can only be predominantly used for housing, then you can imagine how much of that funds actually goes towards financing homes that brings down makes properties a bit more affordable once you have a loan. And that also supports and underpins high real estate values here. The next unique phenomena is we've got very high home ownership rates, which is 90+%. Many markets, many societies, many countries, they're far less, about 50, 60%, at most 70%. So we've got something that's unique here because of that. And that's also because of our HDB policies. When you add all of these up, they do point to fundamental factors that supports high real estate prices, because everyone's an asset owner. So when prices move up, generally everybody benefits from it. So there's unlocking of capital and profit that allows the upgrading effect to take place, and so on and so forth.
Right.
And on that note, HDB has done a marvelous job in supplying affordable homes, good quality, supported by infrastructure, and so it becomes a privilege to be a Singaporean because you're given grants, and you're buying HDB at now, in relative terms to private homes, maybe 1/3 or 1/4 of a condo that might be just next to the HDB flat, BTO flat also. Right. So when you consider the uplift that happens after MOP and all these factors put together, it basically points to elevated home prices. Now, back to your question, why prices have been rising and where do we see things? there's always going to be some headwinds around, but barring major headwinds, and we've gone through major ones at the global level, and because of new costs that developers will have to absorb, that has been thrown at them, when you add it all up, a project that would have maybe they needed to sell at say $2,000 per square foot, now all of a sudden their costs have gone up to a point where they would have to price it at least 20% higher than, let's say, 5 years ago. So, and what has given rise, what has happened over there? You've got stamp duties have gone up for property developers. They will have to pass it down, and because that adds to their production cost.
Right.
Interest rates have gone up, and most developers, in fact, practically 90+% of developers do borrow money in order to increase their returns on capital.
Right.
So interest rates have gone up. Now, the new phenomena is the definition of GFA and what is saleable has now changed, and that's going to change in May, June this year, which would mean that the saleable strata area calculation is going to drop for the same cost. So that's going to affect how they are going to price their new properties going forward. DC rates are constantly being reviewed, and the next big one is construction costs. Construction costs has gone up because of COVID-led challenges. There's disruption of supply chain, material costs have gone up, and the big one is manpower costs. When you add all of this up, prices have just gone up and up. And you're right, mass market is in the $2,000 plus territory, and which was maybe not long ago quite unthinkable.
Right. So in 5 years' time, what's your rough crystal ball? I mean, we'll put in a disclaimer here for you first. Yeah. Your own prediction, like where will prices be in, let's say, OCR?
There are reasons why eventually prices can come down, and why Singapore's real estate market can also be tamed. So there are unique. There's no such thing as prices will continue to rise and not come down.
Right.
So there are those. But barring that scenario, I think our home prices can continue to rise easily 5-6% year on year. So if you were to accumulate that 5 years from now, that could well be about 20 to 30% from where we are right now. Right,
which is like perhaps the OCR will be like 2005 PSF starting from. Right, we'll come back to that to end this episode.